Go on, a Rastastocks. Yeah, man. The one and only Rastastock in a real life, people. Seeing in a real life. So the topic today is capital gains tax. A lot of people that I know personally ask me, what is capital gains tax? And I'm going to explain what it is. And I'm going to also explain how you can avoid paying capital gains tax. And I'm going to have my brother Shine aka Shaddai Pena, explain it as well to you guys. All right, guys. So capital gains tax is the profit released on the scale of a non-inventory asset. Most common for capital gains tax are from the sale of stocks, bonds, precious metals, real estate. Okay, keep that in mind, guys. For me, I deal with stocks. So let's just say if I have a stock and it makes me $1,000 and I sell it, I cash it out. So when I sell that stock and cash it out and send it straight to my bank account, I have to pay taxes on that. So that is capital gains tax. So if a person, let's see, perfect example, let's say like they have precious metals, right? And real estate, because I know a friend of mine that does real estate, they have to pay taxes on the property that they sell. Okay. But for a first time home buyer, they get a tax break for a first time home buyer. So yes, guys. So basically anything that has value, right? Like for me, I do stocks, right? A friend of mine that does real estate. Okay. So anything that has value and you sell it for a profit, that you got to pay your capital gains tax on. Okay, guys? That's what you have to do. Pay your capital gains tax on it, basically. All right. So anything you have, let's like for instance, right? I received some dividends today from a company called Vail. Okay. That company is one of the largest mining companies in the world. They send me some dividends, okay, because I invest in them, right? So they send me dividends. What I did, I reinvest in that dividend instead of cashing it out because I want to slowly build my position in that company. So anytime I get a dividend payment, I reinvest it. Although I might have to pay taxes on it, but another thing about capital gains tax that I like, right? The longer you hold it, hold your current stocks or your current positions that you're in, the less taxes you pay. So basically, to avoid capital gains for a long-term use of for a long-term use of capital gains, remember, when the market bleeds, right, your losses on your 1099, it will show you your losses whenever you invest, right? So when I did my taxes with my tax preparer, he told me my losses, because I literally just started a year ago. I'm being honest with you guys. He told me I lost like about roughly $800. He said that's pretty good for someone that just started. So you don't have to pay anything on your capital gains tax, which is pretty good. Okay, remember, people, your losses will cover you. Your losses will cover you, people. All right, and you also gotta remember, watch what you're holding. Okay, because whatever you're holding, it also help you pay less in capital gains tax. Okay, and you also remember your risk costs. You gotta remember your risk costs, people. All right, remember that. And last but not least for me, if you have a 401k plan from your current employer, remember people, always take advantage of that, because based on what my tax preparer tells me, your 401k plan puts you in a lower tax bracket. Let's just say if you make, hypothetically speaking, 70,000 for the year, hypothetically speaking, right? And you got to keep track of how much money you put in your 401k, because you don't necessarily make 70,000. So whatever you put in your 401k, you got to subtract what it is. But ask your tax preparer, guys, they could break it down for you and it puts you in a lower tax bracket. So anytime I get a raise from my job, that, yes, people, I invest and I still work. I up my percentage on my 401k because it helps me on tax time. It kind of brings me down in a lower tax bracket. So at the end of the year, it evens me out with the government. Okay? So keep that in mind, guys. If you have a 401k, remember, anytime when you get a raise, you up your percentage to keep you in a lower tax bracket, because in the long term, that will help you. But on that note, guys, I'm going to let my brother, Mr. Shaddai Pena, aka Shinance, share his thoughts on capital gains tax. The floor is yours, brother.
Rasta, thank you for having me on and talking about capital gains. This I usually love talking about this because this is the stuff and very important stuff that no one really mentions. And it's very important to file your taxes. Listen, I don't care if you only have $5 in profits, $2 in profits, $100 in profits. Uncle Sam will catch up to you, so don't think that you finna just run off on a plug with some profits from stocks. Be smart, and just know that the longer you hold, the less taxes you pay, right? The capital gains is your gain from what you purchase to what you sell. That's your gain. It can either be a loss or it could be a plus. And if it's a loss, just know you have up to $3,000 that you can claim for losses every tax year. I don't think it rolls over if you have more. And the longer you hold, if you hold a year or more, you pay substantial less taxes than if you sell on a day-to-day basis. So it's really up to you. Do you want to pay more taxes? Do you want to pay less taxes? Are you patient enough to pay less taxes? Are you not patient enough and you're willing to pay more taxes because you're impatient? It's a lot of questions that you have to ask yourself. I can't really come up here and say, you should only do this or you should only do that. It really depends on your strategy. Just be aware of all the options. Because sometimes on the day-to-days you can lose so much that when you win, it's really not a win at the end of the year. And that's what you need to focus on. What's working out for you? Is the short term working out? Are you making money, like for real, or are you losing more? Is it better for you to just go long term? Think about these questions. Think about them. Find the answers that work best for you. Rasta, thank you for having me, brother. I'm going to get going.
Heard it from Shine Nance, people, and you heard it from me. He also said you're allowed to claim $3,000 in losses. Okay, that's very important, people. Remember, you're allowed to claim $3,000 in loss. So whenever the market has a bloodbath and you're losing money, remember, you're allowed up to $3,000 to claim in losses, right? And sometimes you could claim some of it the following year, and so on and so on. Okay, guys? Remember that. That's something important that my brother Shaddai Pena, aka Shinan, said. And you heard his thoughts, you heard my thoughts on capital gains tax, guys. And it's important because here in America, because I don't know how it is in the other countries that you trade, but you probably have to pay some type of capital gains tax. Okay, so you go out there, you find your own tax preparers wherever in the side of the world you are, But people, you heard my thoughts and my brother Shaddai Pena's thoughts. All right. So on that note, people, like, comment, subscribe, and share. And tell the people to subscribe to Rastastocks, because I'm here to let you guys know the knowledge, because it's important to you, the people out there. All right, guys, I'm here to share the knowledge with you. I'm not being stingy on holding it. I'm giving you guys the info. All right. So like, comment, subscribe, and share to your aunties, uncles, sisters, brother, whoever, and let them know Rastastocks is here. He ain't going nowhere, God willing, okay? He's here to share the truth with you guys. On that note, peace.